So here we are today in the info session about the Angel Investor Training Program by SIA, Startup-Investor-Accelerator. And I'm Paula Neme, your host for today. I'm SIA's operations magician, and it will be great to be connected on LinkedIn. The QR codes here go to my personal LinkedIn, and it will be going to the other LinkedIns from the people on the call today as well. This is also a hint to share your LinkedIn if you want on the chat for other people in the chat to connect with you, as we are all interested in the same space. A little bit of what today is going to be. So welcome. We're going to do an introduction to the team, talking about Mosi Ventures, how it started, the SIA, the program that we're going to be running, what angel investing is about for those of you that are new to it, and they will have time for Q&A. This in reality is all about Q&A. So we really want to know from you and what questions you have and what brought you here. So at any point, if you have any questions, please add them to the chat. We will get back to them at the end of the call if that's needed, or if it's part of the program of the agenda, we will address them, okay? The idea here is to make sure that you leave the room understanding what is it about and how we can make this together. So as I said before, rename yourself on Zoom with name and location. It's great seeing the diversity in the room. Engage in the chat, so add any questions, add any comments. A live chat is always welcome and really great to have. And use the raise hand function to contribute during discussions. It's on the bottom on the features on Zoom. And we will get going and start. So with that, I'm going to introduce Astrid Zaharian, our CS co-founder and Europe manager.
Thank you so much, Paula. Hi, everyone. Really nice meeting everyone here. Thank you, Paula, for a very energetic and exciting introduction. It was very nice having you here. And I'm really excited to have everyone here in the room. Today, we'll be talking about angel investing, as Paula Neme shared. Our Transatlantic Angel Conference program has gotten your attention, and we are super happy about that. And we are hosting this event in order to, as Paula mentioned, respond to all the questions you have and help create more clarity around our programs and how to engage with them, and about angel investing in general. So if you are new here, hopefully we can help you discover something. If you have been with us quite a while already, hope to create further clarity and other engagement opportunities of how you can engage with us. I'm Astrid Zaharian, as Paula mentioned. I'm based here in Barcelona, and I'm helping create a local ecosystem here in Barcelona, but also more Europe-wide and transatlantically. We have been working with John Seacrest. Many of you know John Seacrest. He's our great co-founder, the founder of this methodology, and the founder of Mosi Ventures, who has started the methodology, but also the program for 15 years already, has been running it. So I work directly with John and Paula, and we do the angel investor training programs, as you know, and the startup investments. When it comes to Startup-Investor-Accelerator, this is a daughter organization to Mosi Ventures, which might be more familiar to some of you or less familiar. Mosi Ventures hosts several investment training programs, including Seattle Angel Conference and several others, and among that, Startup-Investor-Accelerator. SIA, Startup-Investor-Accelerator, runs several investor training programs, including Transatlantic Angel Conference, which some of you have been part of and some of you have been interested in engaging and are here to learn about. I'll go ahead and share my screen. Hopefully that will create a little bit more visual support for us to understand what we are talking about and dive into details. I'll see how the next page goes. So as mentioned, the company has been running for 15 years. This is Mosi Ventures programs, and Startup-Investor-Accelerator, SIA, has been here in Europe for almost 4 years. Globally, we have reached some really big milestones recently, which we're really happy to share with you. We have hit global 1,000 angel investors participating in our program, with around 300 million invested into the startup ecosystem. This is a really big impact that the company has generated, since the mission is to activate new business angels, and it looks like what we are doing seems to be working, as many of you are becoming active business angels and investing in startups actively beyond the program and after the program ends. We also have now looked at more than 2,000 startups analyzed, and we have internally invested in more than 50 startups. So the portfolio is quite broad. We also have participants in our programs from 38 different countries. So this is quite a global network, and we are excited to have your interest and participation or future participation in this. Moving forward, as mentioned, the home country, the state of the program has been Seattle in United States with the leadership of John, which it has originated. Moving forward, it has spread across different parts of US, mostly US West Coast, and currently we are all across Europe. When it comes to our programs and the mission of the company, the main mission is to create more and better angel investors, because angel investors determine the quality and the strength of startup ecosystem, and the startup ecosystem is the backbone and the support system of innovation of our economy and of global change and improvement in everyone's life. So helping people, professionals, to become better angel investors and creating more angel investors is what we are after. The reason why this is even needed is, as many of you might have experienced yourselves, getting started in the world of angel investing is quite an uncharted path. Many of you have either started by curiosity or fallen into an opportunity with your maybe cousin doing a startup or someone else. Many of you might have invested in some things and might have lost some finances on it, or in the process of making your first investment, I've heard many stories of struggles and unclarity and just not knowing how to process. So through our angel investor training programs, hands-on programs, we aim to help professionals build personal methodology, investment thesis, and the process of how to go through angel investing from A to Z, how to analyze things from I've never seen anything before stage to I just made my investment and I know exactly why and how would my investment or next investment go. So the goal is to create clarity for professionals who are just stepping into the ecosystem, give a path, and also give supported ecosystem and the community to participate and succeed as angel investors. You will hear more about us talking about our programs, and we have already mentioned TAAC, Transatlantic Angel Conference. This program, similar to all our other programs, follows the same methodology, but different from other programs, addresses different geographics and different profiles. So the methodology throughout all our programs are the same. So you will hear different acronyms. Please don't get confused. They are all the same in their content, just oriented at different population. So Transatlantic Angel Conference program itself is oriented at professionals who are based in Europe or United States and are interested in international deal flow, dealing with startups globally, and are open to different global mindset or outlook and perspective to the startups, and do not necessarily need local approach only. So the way the program methodology runs, I'll just give a quick update and like a quick overview is a better word of how the programs run. Our transatlantic program, and similar to other programs, are 3 months in their length with weekly sessions. The weekly sessions are once a week, 3 hours on average. In their format, they are hands-on learning by doing programs. So key thing that leads our programs and distinguishes them from everything else that you might have seen or imagined are these are hands-on experiences. This is not school-like learning, and this is not teacher teaching and participants listening type of program. This is hands-on experience where the participants get to do every single step of angel investing, and while discovering, asking questions and refining personal mentality and building thought processes that they can follow in the future. So these are all based on leadership building, independent thinking building, and independent processes of personal methodology, personal investment thesis development. So the programs are hands-on and they involve all the real components of angel investing. So this is not a sandbox environment, but it is very much connected. It is safe and supported environment, but it is very much the reflection of the real startup ecosystem and the real processes of any angel investor anywhere in the ecosystem doing this professionally. So to achieve that and to help you and all our past angel investors learn angel investing, build skills, build perspective and the methodology, what the program specifics are that we bring a big number of startups which reflect the ecosystem diversity, ecosystems variety, and also ecosystems quality in some way, representing the more higher quality of the ecosystem, hopefully, but bringing the diversity of the ecosystem. So by bringing a group of startups to participate in the investor training program, the participating investors get a direct exposure of the startups from the first day, from the first session. And throughout the 3-month process, the goal is to learn how to identify which startup is the one that should be invested in. And as you can imagine, picking one startup out of, let's say, 80 startups is a hell of a task, and it requires a lot of analysis, questioning, due diligence, more decision making, and more conversations, and more discussions with other investors, and comparisons, and research, and all kinds of different elements. So the 3 months of program is dedicated to going through all these steps in an organized, structured manner, so that you as an investor in the program and in the future can look at diverse startups and identify which one matches your investment thesis and which one you want to invest in and how to go through the investment process. We'll go through the direct structure of it in a bit. I'm just going to make sure I'm doing all right with timing. Paula, do I have a few more minutes to dive into the details of the program, or should I try to wrap it up ASAP?
I think we want more Q&A and less talking.
Less talking, sounds good. In that case, I'll leave the more deeper details of the program and how it runs for a Q&A session. These are, this slide shows some of our startups that we have invested in so far, more than 50 startups in the portfolio. Some have gone on to bring us great exits and returns, which John will mention proudly shortly. Please, John, do dive into some of the returns on the investment. The investors that have gone through our program have shown great activity in the ecosystem, some of them becoming very active as in creating their own venture capital funds or angel investor networks, many others becoming parts of angel networks, and some of them becoming LPs in different funds and discovering what kind of investment type works for them. This is a little bit about our last 4 years of SIA, 200 investors based here in Europe from several countries, hundreds of startups analyzed, and several investments in the portfolio here in Europe. We just finished our 7th transatlantic program. We have hosted 1 female program, so 8, and our next program will be starting in September. I'm sure you'll have questions about it, which we'll address. John, following, I'll leave it up until here to you and let you continue from here. Would that work?
Sorry, Astik, could you show the slide that you are, how many angel investors continue after the program? 60%, say, something like that?
John will tell you the details of that. John is the expert. I'll stop sharing so John can tell you about that more in detail. And I'm happy to share with you.
No, but you show the slide. It's only to see the slide.
Go back here, okay. And I'll leave this to John to continue.
This one. Thank you.
Yes.
Thank you. I can see the number. Okay.
Perfect.
Thank you.
John?
So thank you. Let me adjust the spotlights here. So Thanks. We've been running this for a while in a couple of contexts. We actually started this program in Oregon, doing the program called the Willamette Angel Conference in 2007, and it's built on some work done in Portland in 2002. So the remaining program in Oregon is the Bend Venture Conference, which is still pretty active and has just opened up things as well. But I want to talk a little bit about, what the consequences of the asset class are. We hear, the classic 90% of startups fail. And there's an interesting study by CB Insights that looked at 105 angel-funded companies and then asked them, why did you fail? And they said, primarily they failed because they went out of business because there wasn't a market need. And so that significant lack of market need is one of the things that we as angels ought to be able to detect. So as we're going through and looking at companies, we're going to look at these kinds of things of what kinds of things went on with them. But these are the ways that the companies are exiting. And then here's the failure points about why they thought that they had failed. Market related, team related, and then really operational and product related kinds of failures. So this is what we look at in the asset class of a startup as we're going through that process.
John,
Now,
do you mind if I share the screen, or would you like to be sharing?
Oh, I thought, sorry. I think I am sharing. What are you seeing?
We are not.
Really?
I can see, but yeah, I can see your whole screen.
I do as well.
I'm sorry, must be a mistake from my side.
So is that sharing correctly? Do you see the reasons companies fail?
Yes.
Yes.
All right.
Now, yes.
So this is how the companies get out, right? Some of them, 50% of them crash, 20% of them get sold to a larger company, 15% of them get acquired for the staff, right? About 7% are zombies that don't really die, but don't really grow. And then there's, various little pieces of what happens to them. And this little tiny bit go public, right? And so we're not thinking that this is actually a 9 out of 10 succeed. This is more like out of the 1,000 that we look at, one succeeds in the big venture capital sort of way. It's just part of the structure of the industry. And here's where we as angels can go in and look at the companies and understand where there's some place where there's something that's a shiny spot that's good, or maybe there's a place where we can help them get a little bit stronger. So why would you do this? All these companies are failing left and right. They have market problems. They have team problems. It turns out that if you're paying attention as an angel investor and you're providing support as an angel investor and you're selecting the companies that are going to have extra problems out of the process, that with that a little bit of discipline, we can get somewhere between 20 and 28% returns on our money. So 25% being a reasonable thing to expect. And the core to all of this uncertainty is that you build a diversified portfolio. So it's not that we are investing in a company and betting that it's going to go to the moon. We're investing in 20 or 40 companies. And out of those 20 or 40 companies, we're finding that we have some outsized returns from a couple of them. And along the way, we're going to do some interesting things. It's very interesting to look at what the future is going to bring. Angel investing lets you see the future. It allows you to work with very bright, interesting people. You learn all kinds of things along the way. And more importantly, as an angel investor, if you are not creating value for the company besides your money, then this is the wrong investment for you. We would like you to be making a difference for that company. And the more difference you make for that company, the more you help your financial returns. And if you can't see that magic, then it's time to look in other places. When we look at returns, it's not unreasonable over the lifespan. This is a long cycle, right? I just had a very nice exit. It was invested in 2008. So in 2004, it got done. 2008 is when I put the money in. And so 16 years, but I got a double-digit return on my investment. So that makes up for the previous, 8 years of investing, and everything's good for that. So I get my money up and I go in. So averaging around 22% out of that particular data set. More importantly, one of the problems with angel investing is you write a check and the company dies, and you write another check and the company dies, and you write another check and the company dies. And that's because companies that fail tend to fail earlier, and companies that succeed with big exits tend to exit much, much later. And so there's a certain amount of acceptance of how things are going, being patient with the process. I'm going to invest this money. It's going to be taking 10 to 15 years. If I'm investing at the early pre-seed stage, then on the outside, those things seem to be going. So Thelma is asking me to put this into presentation mode. Let me see if that will work. Is that better, Thelma? So people were asking earlier, is what are the returns? Well, it's very difficult to give you returns. We've only been doing this for 14 years. And so our very first investment in Seattle Angel Conference is still live and running. Now, the question is it a zombie that's never going to exit, or is it going to have an exit? Probably it's not going to be that one is probably not going to be one of the outsized returns. But number 5 that Chris was talking about might actually have an outsized return. We don't know. They're still going. They're still growing. So we have to be patient with that. The other side of it is that we don't have liquidity in this asset class. So for the most part, we are holding onto the stock until exit. Although there are engines starting to be developed that would enable secondary markets. But for our returns, if we look at the first 5 years of the Seattle Angel Conference, it approximates this graph. Number 1 still alive, 2, 3, 4 are dead. Number 5 is still alive, probably in group 3, maybe in group 4. So might be in this, sorry, it might be in this 1 to 5 group. And then, the outsized exits are over here. So these are the extra big exits. So I've had 3 20x exits in my portfolio over the direction of my time. And so I am currently ahead on all of my angel investing, and I still have almost half the portfolio still alive going. There are many ways for people to invest. We like to say that people are investing in, if your net worth is below 5 million, investing in groups is a really wise thing to do. You can get your diversity across your 20 or 40 deals. And depending on how you want to do that, whether you want to be in charge of your investing choices, or whether you're willing to follow somebody else, or whether you just want to put it up there in an algorithmic passive way, there's different choices to do that, and we can talk about how that happens. Our goal, however, is to create angels who get excited, who then go create these things that then invite more people into the system so that we get more angels writing good checks. We are also part of both EBAN, which is the European Business Angel Network, and ACA. So our members, as they come through us, then get connected to all of the work that those groups are doing across both US and Europe. So then we have this TAAC 8 program coming up. I will get to Rajmir's thing. We are starting Seattle Angel Conference 28 in September, and a couple weeks later, we're starting the Transatlantic program. The main difference being the Transatlantic program has European components, more European investors. We try to get more European companies They run the same methodology. They run on European time for TAAC and West Coast time for Seattle. That program has done a bunch of work to create a bunch of organizations in Seattle, and we want to do that in other places. We do want to mention that we've got an early bird special for people who are joining in by the 18th. Then we cut the price down to, I guess, 2,000, it says here. And then I want to bring up Sarah and Liv, who I think are here, who are going to be the SPB organizers for us. Let me stop sharing for a second. And let me find Sarah and Liv. Hi, Sarah. And Liv.
Hi.
So when we're doing the Seattle Angel Conference and the Transatlantic Angel Conference, we ask everybody to do, is this a good company? And then we say, don't worry about the deal because the SPB organizers are doing the deal. And so Liv and Sarah are our SPB organizers, essentially doing the second round of study of how to be an effective lead angel. Would you like to introduce yourselves? Sarah, you want to go first?
Yeah. Hi, everybody. I'm Sara Shalabi. I'm originally from Italy, but now I'm based in Barcelona. My background is in medicine. I'm a physician and a biotechnologist. I work in an hospital here in Barcelona, both as a medical doctor and a researcher in the field of liver disease. I joined the world of angel investing a little bit more, a little bit less than 1 year ago. With this program, I joined first as an investor. The first round, TAAC 6, we invested in a medical company, actually, with a medical device. We're very happy of our investment. We recently organized a trip to visit the startup, which was very exciting. Then I co-led the previous round, TAAC 7, together with Malcolm. And now I'm excited to take on the role with Liv, together with Liv, lead investor in TAAC 8, and happy to join this group and hope that to see somebody of you joining and do this together again, which is a lot of fun.
Liv, would you like to do your introduction?
Sure. Hi, everyone. I'm Liv. Apologies for the background noise. I'm still in the office. I'm originally from London, but moved to Barcelona a few years ago. My background is in finance. So I moved from the corporate finance world in London to the startup world in Barcelona, and more for the change of lifestyle. Similar to Sarah, my angel journey started last September as part of the TAAC 6 program. I really enjoyed the program, seeing things from the investor side, really analyzing a whole group of companies from a variety of sectors, and meeting a fantastic network of people interested and curious around the investment world and the startup space. And it's really opened up my eyes to the possibilities in Europe and beyond that maybe weren't available to me in the UK corporate finance space. I'm really excited to be co-leading the program, the TAAC 8 program, with Sarah in September, seeing another round of very interesting companies, meeting a round of new people, hopefully see some of you on the program, and just broaden my knowledge, my understanding, my horizons, and continue to learn every day. Thank you.
Well, thank you both. I appreciate it. Let me drop these spotlights. So I saw a question from Rashmir asking about the typical investments. And so I want to address that a little bit. Our program, sorry. So our program gathers 40 people, $5,000 a piece. That $5,000 investment then makes a $200,000 fund, which we then invest into a company. And so all of our investments are running at somewhere between $150,000 and $200,000. The company round may be much bigger. We try to stop looking at companies that are raising rounds bigger than $1 million because they're not early enough for the kinds of things that we care about. The angel data that we were looking at earlier, the round size can vary a great deal. There is a report called the Halo report, which has a lot of data about the distribution of how that works at different stages. But for the most part, at early pre-seed investing, maybe we are the first money into the company. We're looking at investments where the group investment is ranging somewhere in the 200 to 750,000 investment for most angel groups, and the individual investment typically for individual angels is 25,000, but we structure it so that we can take $5,000 investments and then as a group make investments that are bigger than 50,000. And for this program, we try to do it for somewhere around 200,000 is our goal. So let's talk a little bit about the structure. We're going to start in September, and then we go back and forth. We see all of the companies, we listen to them talk, we make a decision, we hear this quarterfinal pitch, we make a decision, and we work through that until we get to the final selection of the finalists. And then we structure a bunch of due diligence meetings where we break up into teams and then go through the insides of the company, check their customers, check their financials, talk to their team, and generally get a good sense of how that company is running or not. And in the process of doing that due diligence, we gain a great deal of insight. And in the process of arguing between this company is better than that company, we get perspective on what other investors think is important about the company. And so that's the core of our program. We'll make a decision in December and write a check into the company. And that check then is going in as a group check, one entry onto the cap table of the company, where the SPV organizer, in this case, Liv and Sarah, will then manage that investment for the duration of the investment. So let me get that out of the way. So startups can apply here. We would love it if you find some European companies to come and apply. Let's see if we can. Yeah, so if you take a picture of that QR code, they get to the GUS profile for the application. We would love to have a majority of European companies presenting or applying. Sorry. If you follow us on LinkedIn, this will get you to our LinkedIn page, and Paula will post our LinkedIn into the chat. You can be aware of what we're doing as an organization. We have a bunch of events that are coming up. We have a workshop that we're running. We also have an Angels and Beers thing we do regularly. And we also do open coffees, trying to help startups get connected to resources in the community. And then that gets us to the end. And we would like to address whatever questions that you might have and see if we can help things go. Let's get me off of the spotlight. Anybody have any questions that they want to address on anything about angel investing or startups or Europe versus the US, or ask Chris what he's been doing with his angel investing since he came through the program? Yeah, go ahead, Anibal.
Yes, thank you. Thank you for your presentation and for your team here in Barcelona. I have the opportunity to participate in the last Saturday in the hub, in technological hub, with the special session for how the startup grow and work, and was fantastic. The people, the place, everything fantastic. I wonder about how do you select the group, because maybe there are different. For example, I am a businessman for 30 years in technology. I do investment all the time with my company, I am retired, not retired, that I have advisor because the second generation is in charge of the company, and I have a lot of time to see a startup and work with your community. So it's so exciting to participate here. But I wonder if there are similar background, professional background, when you
No,
analyze.
so in fact, we don't have similar background, and we see that as an advantage in a bunch of different ways. What we want is for you to have perspective. And one of the things that we notice is that people come in with a very, I do programming, therefore I shouldn't look at tech companies because they're weird and I don't understand anything about it. But if we as a group of people, and for the most part, most of us are not ready to be writing the $20,000, $100,000 checks. And so we need to figure out how to work in groups. And when we work in groups, we can rely on the expertise of the other members in the room. Some optimize for marketing, some optimize for finance, some optimize for manufacturing, some optimize
And
for.
that's fantastic because it avoids the bias. Sorry, the bias. Sorry for my English. It's so bad. So I wonder if I see quickly the program and I saw that there are no theory. There are practice. Only that. About
Right.
the main indicator like burn rate or BTC or CIAC or several
Yep.
typical indicator of startup. But there are some introduction about the main concept of the how to evaluate an startup or.
So thinking about this as a chemistry lab class, here's the equipment, here's your experiment, let's go. So the theory class is over in the lecture class over there. There's a lovely book by David Rose called Angel
Perfect.
Investing,
Okay.
which talks about a bunch of the things. He also wrote a book called the Startup Checklist. So there's no shortage of people telling you TAAC to LTV kinds of things, or why you need to think about how you have certain skills in your team, or all of that. Plenty of theory out there, but lots of people don't understand it because they haven't done it. And so ours is an experiential path like Startup Weekend, where you do it, and then having hit the problem, then you
Yes.
learn deeper. Yes.
Hey, John,
To
I
go
can
to the
give
client.
John, I can give my
Yes,
I can
please.
try to keep it brief, but I can give my synopsis if this will be helpful. So the reason I joined the Saddle Angel Conference, and that was about 10 years ago, and I did it. There are 6-month sessions. I did 4 of them, and it was lovely. And first of all, when you think about it, what's $5,000 every 6 months? I mean, that's less than going to university. Seriously. I mean, it's nothing. This is peanuts. You're going to spend like my kids. I was sending them to college, and each kid I'm spending $5,000 to $6,000 a month. That's like 11,000 a
Obviously.
month for 2 kids. So what's $5,000 every 6 months? This is peanuts. I mean, you should get anybody that's an
It's
accredited
not about the
investor.
money, it's about the time, it's about the group, it's about the
Well, I know.
experience, it's not the money, obviously.
So
It's
the
not
question is
about the
for
money.
people, but the Settle Angel Conference was created for people that want to learn and get in, and then you can figure out what you want to and graduate and go and do bigger and better things after that. That was the original intent when I joined, right?
Still is.
So clearly you've already decided. It's for people that already decided I have some time. If you want to do passive, then go find a different group, because it's not about passive, it's about the learning experience. And basically where I joined is I thought 5,000 every 6 months, that is so much peanuts, it's nothing. And so for the learning experience, and so it's basically, I did it 4 times, and each time we started with 50 companies that came in. Within a very short period of time, before we even talked to anybody, we cut it down to 25. Then we heard like 1 or 2 minute pitches, really, really short. And we did it all in person. And then we cut it down to like 12, then we cut it down to 10. And then once it hit 10, we split our team to split them up 10 into 5 teams, 2 companies per team. and everybody participated. And so you had five teams with 2 companies each. And we went and each did due diligence. Well, the thing about when you have a big group is, you know what the problem is? Somebody else is going to do it. Somebody else is going to do it.
Yeah.
Well, when you do it this way, the unique, and again, and this is my experience with the Cowtown Angels, is that's the kind of, you got a lot of things, and it's only 2 people that do most of the work, right? But here you split it up, and so you got, and then what happens here is that, and the reason you're going to go and do the work is that after we went and did all of the research for 2 companies, our team, we got to go and present to the whole group our 2 companies, and so you're kind of going to show what you did to the whole thing, and you present and you argue your case, and you decide who's going to be the final 5. And you've got to defend your 2, and then you got the final 5 that goes to the conference. Well, you think about, there's a couple things that going on here. You're learning from the whole group some amount, because you're seeing how they're presenting their companies when they're presenting their due diligence. When you're doing the due diligence, you have a smaller team, and everybody's participating. You have a smaller team. And so you get a broader experience of the whole due diligence process. Now, and then you come out of that, you come out of that with your benefit, whether or not the company exits or not. For in my mind, this is, you can have, everybody has their own justification. In my mind, it's irrelevant whether they exit or not. I'm paying $5,000 to get an education, and so
we're a little bit different in the structure. It's when, we've added in a 1-minute pitch for every one of the companies.
okay,
We go from the 60 companies to the 24 quarterfinalists to the 12 semifinalists to the 6 finalists. But all the structure that Chris is talking about is all still valid. And the active people actually doing their due diligence and standing and delivering, or not doing their due diligence and then standing and not delivering, tells you a lot about the investor and whether you would like to have them in your group next time. And so there's a bunch of learning, not only about the startups, but about how to work with other investors to get things done. I want to know, Chris, what you did with that knowledge that is useful or not.
Well, the first thing is I stopped until just recently. I just joined the Cowtown Angels just recently, but I stopped because I got a CTO role. And so I had to build a team from scratch, and I had to build it up, and I had to hire, and then I had to, everything you think about that comes with a CTO role. I mean, so I was heavily involved. As one person was saying, I didn't have the time. I dropped out completely. But that knowledge of being able to go and very quickly go, because after going to 200 companies, evaluating 200 companies within a 2-year span, you learn certain skills about for one thing, I learned, be careful if they have a professor as one of the founders. I mean, this is just something, and I can tell you why, but I didn't know that before. But you learn these things after seeing about, and so now you take it into the professional world. You take that back into your professional world, and when you're going to do a partnership, which I used very often in the course of the 8 years of me being the CTO, I'm partnering and I'm looking at, and you use those skills when you look at a company. You evaluate who you're going to be partnering with, who you're going to work with. And so now I'm getting back in, and now I'm getting back in and joining Cowtown Angels, and I'm thinking, oh my goodness, I'd love to bring some of that over here to Fort Worth.
We'll work on doing that. And I sent in the chat a link to one of the guys that is in Austin that I think you should meet. I want to make sure Simone gets a chance to talk before we run out of time. Simone, you want to ask your question?
Can I quickly just say something in terms of like the time management, and following on like Anibal comments, like the bare minimum that you invest in the program, it is what you'll get out. The bare minimum is already really good. The more time and that you invest in it, the more you will get out. So nothing stops you to do one-on-one with your cohort friends, right? You don't have to do that. That's not part of the program. But if you do that, is that what you get out the most? So the bare minimum, the bar is already high. And then the more you invest, the more that you're willing to invest in your people, because some of them will be probably based in Barcelona as well, online, etc., the more you will get out of the program as a whole. Sorry,
Perfect.
thank you. Just wanted to say that.
Yes, fantastic.
Yeah. So Simone, a quick question, and then I'll answer Rashmir's questions that she put in the chat.
Yeah, thank you, John, for this session. My question would be, since for a lot of startups, angel investment is of value also because of the advisory, I would love to know, how do you deal with this topic, advisory investing?
When we say if you don't have something to add besides money, then you shouldn't make the investment. What we're meaning is you should find the place where your expertise creates value, your network creates value, your listening creates value for the company, and you build, this is a 10, 12, 15-year relationship. We expect there to be an ongoing conversation and make that go. The due diligence or the SPV organizer is the main point person. So like Sarah, whoever wins TAAC 8, Sarah and Liv will be the ones that manage that relationship. But you have 40 people with 40 different sets of skills. You know, I need somebody who knows how to do marketing. Well, this person knows marketing. I need somebody who has a relationship with this kind of manufacturer. Well, actually, it turns out that none of our people in this group have it, but of our 1,000 alumni, there's these 3 people over there that do it. And so we can make introductions. So that's actively part of what we hope to cultivate. Doesn't always happen, but it's an opportunity. Let me also address Rashmir's question. She asked, Chris was saying 5K every 6 months. So we've increased our program fee. So it's, you know, a program fee and then an investment. The investment's 5,000. That 5,000 makes this fund of 200,000. That all of that goes to the company, but there's a program fee of 2,500 with a discount if you come in early. The thing that he's mentioning is he learned over and over by going through multiple times. So we aim for 50% of the people to be people who have done it before and 50% who haven't done it before. And that helps build this habit of work and habit of perspective that we're trying to do. Some people come in once and they find their home and they're clear. Some people come in, well, we have someone who's been in since SAC 7, right, and has been in every program since then. So she's on to 20 rounds at this point. The main difference between Europe and the US is that we have European companies and we have European investors. European investors act differently than US investors. And depending on which country you're in, it actually is a much stronger and broader set of different perspectives than we see in the United States. One of the things that we notice is that impact investing or having value creation by the investment is more important to Europeans than it seems to be that in the US, or at least it's expressed more directly. But the companies we see are in general interesting. Various countries respond differently in terms of the quality of the companies we see. And so that's a worthwhile perspective to get. When we get an Armenian company that's looking for $200,000, it's a very much more mature company than when we get a German company that's looking for $200,000, right? And so the economies of the different countries drive, you know, different kinds of things. In this last round, all of the companies were either that made it to the finals were US or Canadian companies. Part of that is that we didn't have as many European companies as we wanted, which is why we're asking if you see a company that's an early pre-seed company from Europe, we would love you to bring them in. We'll try and market that harder this round as well. And in terms of the value alignment, what we're trying to do is to get you to have a thesis and an opinion about what's important about the investment for you, which is going to be different than everybody else's. And it may align or it may not align. And so what we would like you to do is to stand up and deliver your thesis. And as it changes, talk about that change with the other people in the due diligence stand-ups that we do so that you will start seeing that. And we will cut off the bad and stupid companies out pretty easily. But on the other end, the really good, exciting ones that look weird, we will also cut out because as a group, we can't agree on them. And so we will find a reasonable, adequate company as shown by our returns for the first 5 years. I think we have the probability of a reasonable return out of our portfolio. I think we have less of a probability of a great return because of how we do our process. And our goal is to get you to have perspective and then go find a bunch of people who think about it the way you think about it, and then set up a mechanism by which you can achieve great returns. You know, the 20, 50, 100x returns are possible when you get a group together that has synergy. But it's not possible to do that in the kindergarten class, and we're the kindergarten class. And we're just trying to make sure you hold hands, play nice, and learn how to cross the street without getting hit by cars.
Thank
So,
you,
yeah.
John. We have 4 minutes left, and I have questions and a proposal. One, if you have more questions, please add them in the chat, and we will see if we can address them on the follow-up email. And we will share all the information that I share in the chat on the follow-up email, so you don't have to save them necessary. And I also want to close it with a word from Sarah and Liv. Like, I would love to hear briefly your highlight of having done the program, why are you still doing it, and people invite them to come to TAAC 8. But before that, I wanted to briefly, John, if you can share what is a sidecar. I think it's aligned to what Rashmir was asking about.
Yeah, so
about the values. Yeah.
we are going to pick one company. Out of the 6 finalists that have had deep due diligence, the probability is that 4 pass due diligence. And sometimes people get excited about a company that doesn't win our program. And so we will create a sidecar, which is to say, this is not the one that won, but we have enough people that are excited about it that we're going to form a fund anyway. And people double down and they write a second check and form another SPV. And so we have that happening right now with a couple of the transatlantic 7 companies where we have, 10 people that said, oh my God, how did they not win? Let's write a check for this company. And now we're going and finding friends of the friends to try to make that a big enough check so that it's meaningful for that company. Yeah.
Thank you, John.
Very clear.
Sarah, do you want to share some words?
Yeah, so for me, the most important thing is definitely the network we've been building, people that are not only co-investors, but are almost friends, some of them friends. I can call them friends now. So not only we exchange different expertise when we try to pick the best company, but also life experience. We are all from different backgrounds, but seems like we are all like-minded with the same mindset. And especially in Barcelona, we get to do also in-person events, which I think it's a really big added value, and can't wait to meet more of you at some of these events.
One of the things that we spend time doing is trying in Europe to find the startup events, the startup parties that people are going to anyway, and have side events around them for our alumni to meet each other. And so like when people go to Slush or people go to South Summit or people go to Web Summit, we try to have a side program along the side for the alumni to meet each other and expand the network. We don't quite have as many startup parties in the United States, so that's a little bit hard for us to do here. Any other thoughts before we end, Paula?
I would love Liv to give some words as well, and then we will finish.
Sure. I would say the biggest benefits for me were kind of 3 things. As Sarah mentioned, network is number 1. I was looking at doing an MBA for the network, and I've met more kind of people from diverse backgrounds all over the world with a shared curiosity for learning about the world. I think that's the number 1 benefit that I've had. Yeah, I mean, Sarah and I would say we count each other as friends. Sarah's a doctor. We have friends in the AI industry. We have contacts in the network working in tech, so a wide variety of background and people, but all with a shared curiosity to learn. And I suppose that's my second biggest benefit, is learning. It's a very open environment to be able to ask questions. My background is finance, but there's a lot that I don't know about a lot of things. And so it was always a safe space to be able to ask questions, to be able to say, oh, I don't quite understand that. Maybe you could help me understand it. And also to share my experience and my perspective in a very open and learning-based environment. I think that was really beneficial to me, just to be able to ask questions about something that maybe in finance I thought I should know about. And thirdly, kind of professional development. I mean, it's opening up so many doors to things that I could do in the future, in the finance industry, in the startup industry. Each conversation that I have, either through the TAAC program or through the events that we do in Barcelona or outside of Barcelona, it opens my eyes to a different thing that I could do, maybe not now, maybe in the future, ways that I could work. And that's actually something that is a really big benefit. I don't know what other jobs there are out there, but this is interesting. Let's explore it. Let's see who in the network I could speak to about that. The ecosystem is really vibrant in Barcelona, but also a very, very connected internationally. And that is something that I don't think I would have got on a very, very much more expensive MBA program or other ways to look at things. So I'm kind of, it's opened my eyes to a whole different world, both in kind of the investments that we're doing. I did a couple of sidecars as well, and kind of the possibilities of things to do in the future. So that's my biggest benefits.
Yeah.
Thank you. Thank you so much, Liv, and thank you, Sarah, for sharing. I posted on the chat the SIA's LinkedIn page as well. Follow us. We post the updates and news and events and share information from Sarah and Liv as well. So it would be really good to see you in our network. I'm sure we will anyway. As I said, I'm going to send a follow-up email with all of the information that we share and what is the next steps if you want to be part of TAAC 8. Then the early bird price is closing on Friday next week. So if you're thinking about it, we would love to have a one-on-one call to see what that looks like for you, if it's a good fit for us and for you. But I believe that having you here is already like a great advance. And I hope we answer all of your questions and you are as excited as we are to be running this program. We're on time. So thank you so much for joining today. And I hope to see you online and in person wherever you are.
Thank you very much.